Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WESTLAKE CORP quarterly report. Westlake Corporation offers a diverse range of products and services across various industries. The company's key business segments include performance and essential materials, ethylene, polyethylene, styrene, chloralkali products, PVC, epoxy resins, and base epoxy resins, housing and infrastructure products, plus residential construction materials, PVC sidings, trim and moldings, architectural stone veneers, plus industrial and commercial products, PVC pipes and fittings, PVC compounds for various applications, plus consumer products, landscape edging, matting, marine dock edging, masonry joint controls. The company serves a wide range of customers, including chemical processors, plastics fabricators, construction contractors, municipalities, and supply warehouses. Its products are used in various markets, such as residential construction, packaging, automotive, healthcare, water treatment, wind turbines, and coatings. Westlake Corp stock price plummets 46.51% due to financial missteps and market challenges in the past year. Westlake Corp's stock price has taken a significant hit of over 46.51%, largely due to a combination of negative news and challenging market conditions. The company's financial performance in 2025 was marred by consistent earnings misses and net losses, with each quarter reporting substantial declines. The root cause of this decline can be attributed to several key factors. Firstly, the company's inability to meet analyst expectations, resulting in significant net losses across its quarterly results. This was exacerbated by operational disruptions, including planned turnarounds and unplanned plant outages, which negatively impacted earnings before interest, taxes, depreciation, and amortization (EBITDA). Furthermore, Westlake Corp faced an unfavorable industry and economic environment, characterized by a global supply-demand imbalance for many of its products. The company's performance and essential materials (PEM) segment was particularly affected, with lower pricing and higher energy and feedstock costs throughout 2025. The negative outlook from rating agencies, such as S&P Global Ratings, further contributed to the decline in Westlake Corp's stock price. In October 2025, the agency revised its outlook to negative from stable, citing concerns about global oversupply in the chemical business and potentially weaker housing demand. In conclusion, the significant drop in Westlake Corp's stock price can be attributed to a combination of financial missteps, operational disruptions, and challenging market conditions. The company's inability to meet analyst expectations, coupled with an unfavorable industry environment, has led to a substantial decline in its stock value. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. The main drivers of revenue growth are the increasing demand for housing and infrastructure products, driven by trends in building permits and housing starts, as well as investments in infrastructure. This has led to a 9.1% increase in net sales in 2025 compared to 2024. Revenue decline. On the other hand, several factors have contributed to revenue decline. These include the closure of facilities in Pernis and China, which resulted in a loss of revenue. Additionally, antitrust lawsuits and supply restrictions related to caustic soda, ethylene, and PVC pipe have also negatively impacted revenue. Neutral/no clear trend. Some financial activities had a neutral impact on revenue, including an increase in trade customers' accounts receivable and an increase in investment value through equity method investments. However, the overall effect of these activities is unclear. Net income and profit margins. A shift in fortune. The financial performance of a company underwent significant changes between 2024 and 2025. Initially, net income decreased by $938 million in 2024 compared to the previous year. However, this trend reversed in 2025, with an increase of $1,180 million, resulting in a net income of $108 million. Profit margins also experienced a notable shift. The operating profit margin improved substantially from -27.1% in 2024 to 9.2% in 2025, representing a significant increase of 36.3%. In contrast, the gross profit margin decreased, but this change is not directly stated in the provided information. The reasons behind these changes are attributed to various factors. Lower sales prices for many products and reduced sales volumes contributed to the initial decline in net income. Additionally, higher energy and feedstock costs further exacerbated the financial challenges faced by the company in 2024. The subsequent improvement in operating profit margin can be attributed to a combination of cost-cutting measures and strategic adjustments made by the company. The company is generating positive operating cash flow, indicating a strong financial position. The data shows that the net cash provided by operating activities has been steadily increasing over the years, with notable figures including $880 million in 2024, $240 million in 2023, $182 million for the 3 months ended September 30, 2025, $240 million for the 9 months ended September 30, 2025. This trend suggests that the company is efficiently managing its operations and generating sufficient cash to meet its financial obligations. The company's debt level has experienced fluctuations over time. Initially, the current portion of long-term debt decreased significantly from $6 million to $750 million. However, the long-term debt itself showed an increase from $3,906 million to $4,736 million after a brief decrease. Despite these changes, interest expenses have remained relatively stable, with no significant variations mentioned in several pages, and only minor decreases observed for specific periods. The financial performance of the company's segments varied significantly over the past quarter. Performance Materials and Essential Materials struggled, with both experiencing declines in revenue. Performance Materials saw a 13.1% decrease in revenue over 3 months and an 11.9% drop over 9 months. Essential Materials also suffered, with a 13.8% decline in revenue over 3 months and a 6.3% decrease over 9 months. On the other hand, Housing and Infrastructure Products performed well, with a slight increase in revenue of 0.6% over 3 months and 0.3% over 9 months. Management is expressing caution about the company's outlook due to challenging macroeconomic conditions, reduced demand, and lower prices. They are cautious about numerous risks and uncertainties, including economic downturns and raw material volatility. To address these challenges, the company is focusing on cost reduction and turnaround efforts, such as the Petro 1 ethylene facility in Lake Charles. Management believes that their sources of liquidity are adequate to fund normal operations and meet debt obligations and quarterly dividends. Acquisitions and divestitures overview. Westlake Corporation's financial summary reveals limited information on acquisitions, with only a mention of recent acquisitions without specific details. On the other hand, there have been several divestitures and asset transfers. The company has transferred various assets and liabilities to Eagle Spinco, Inc. in 2012 as part of its commodity chemicals business. Additionally, it has closed or mothballed certain units at Perni's facilities, including allyl chloride and epichlorohydrin units, liquid and solid epoxy resin units, and bisphenol A units. Furthermore, the Suzhou Huasu Plastics PVC resin unit was shut down in 2025 due to economic viability concerns. The company has also terminated a portion of its foreign exchange hedging contract with a notional value of €70 million in July 2019. These divestitures and asset transfers indicate Westlake Corporation's efforts to restructure and optimize its operations. The company has a history of paying dividends and buying back shares. In terms of dividend payments, the company paid out $197 million in 2023, $204 million in 2024, but then reversed this trend by paying out $204 million in the first 9 months of 2025. Regarding share buybacks, the company did not repurchase any shares in 2023. However, it bought back shares worth $30 million in 2024. As of September 30, 2025, the total number of shares repurchased was approximately 9.5 million at an aggregate purchase price of around $664 million. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights several concerns regarding inventory buildup and supply chain disruption. Notably, inventories increased by $30 from September 30, 2025 to December 31, 2024, indicating a potential accumulation of stock. Furthermore, an inventory write-down of $15 million was recognized in the 9 months ended September 30, 2025, suggesting that some of this excess inventory may be obsolete or unsellable. Additionally, there are concerns about supply chain disruptions due to the closure of the Perni's facility and the shutdown of Suzhou Huasu Plastics PVC resin unit. These events could lead to shortages and delays in production, impacting the company's ability to meet demand. The disruption of trade flows due to duties and tariffs also poses a risk to the supply chain. Overall, these concerns suggest that the company may be facing challenges in managing its inventory levels and navigating potential disruptions to its supply chain. That concludes the financial summary for WESTLAKE CORP. Feel free to comment below, and I will be happy to answer them when possible.